Okay, it's the Wall Street Crossover Show, sponsored by Admiral Markets, and we have here today the senior market commentator, Are you senior?
I feel senior, certainly. I'll be 50 in November, so I think that probably.
All right, well, it's just a few months older than me, that's a relief. Darren Sinden.
Good afternoon.
Right, what's on your mind today? We've got a bit of budget news.
Well, the weather first of all, because I've got a drenching on the way here. But yes, it's budget day. It's the start of the.
Is it an emergency budget?
Well, they're calling it that, but it's just, it's the first chance that George Osborne's had to flex his exchequer muscles. So
right, on his own, without any interference from anyone else.
It's also the first day of the Ashes test. I've probably less said about that. The first day of the first Ashes test, but less said about that for the moment.
Okay,
better. And lo and behold, there's yet another deadline for Greece.
Okay, 5 days, is it?
5 days now.
Well, not 24 hours now, it's 5 days.
Well, these things have never let the truth stand in the way of a good story, as Mark Twain said. So we await with bated breath, though I'm not going to hold my breath for 5 days, I know.
Okay, all right. And any other sort of highlights on the horizon?
Well, I mean, we've got, as we'll see later, we've got some potentially interesting data points in the US, or at least talking points in the US this afternoon.
But we're still really focused on Europe. It's difficult.
Yeah, I think we are. Europe, and also with half an eye at least on China, where the situation is almost descending into the realms of farce, and yet European markets to some extent or Western markets generally seem relatively ring-fenced from that, but that's probably a discussion for another time. Yes,
okay, well let's move on to today's slides. The data released over the European session.
Relatively thin in terms of European data today, Zach, but we come back to an old talking point and a favourite of the show. UK house prices. Halifax UK house price index for June came out this morning. Year on year, we're now seeing house prices supposedly in the UK up by 9.6% versus the prior read of plus 8.6%. As we've said before, you pay your money and takes your choice with the house price data in the UK. It'd be nice to have one dependable and reliable data point. The Halifax has always been on the more bullish side, I suppose. We'll have the nationwide numbers out in the near future, and they've tended to be a little bit more circumspect, as has indeed the RICS number, the Royal Institute of Chartered Surveyors. Anyway, 9.6%. I haven't dug down into the nitty-gritty of this. It'd be interesting to see the regional mix, but that's potentially good news for George Osborne, I suppose, because we're all a bit better off. Speaking of Mr. Osborne, UK budget is ongoing, so I won't say too much about that, but the expectations were for him to fill out his policy pledge, in the manifesto pledge, if you will, about where he's going to find £12 billion of benefit cuts. The thinking was it's going to come from benefits to those people who are actually in work rather than those people who are out of work, and that they also might give us a bit of a heads up on a sale of some further state shareholdings, perhaps significant stakes in Royal Bank of Scotland.
Selling the family silver, it would appear.
Well,
or selling it back to the family that already bought it or something.
Well,
I mean, the other thing was just the benefit cuts, £12 billion. Doesn't seem to be a lot of money in terms of a saving, but it's enough to upset a lot of people. So it's a bit of a double hit in terms of that.
It is, but if you had to be completely brutally honest about it, it's possibly part of a change to try and shake up the situation in the UK, where a lot of people become used to receiving
big handouts,
big subsidies, and really we need to create better jobs for these people so they can actually earn a proper living wage, rather than be dependent on 20% of household income or something from the government. It's just not really the way for a modern economy to be working. And then
speaking of economies not working,
well, exactly, that's a nice segue, isn't it, into the Eurogroup meeting. Another one of those today. Greece is still the main topic. As we suggested at the top of the programme, there's a new 5-day deadline for them, and I heard a report as I came out that Alexis Tsipras is now talking about, is there a scope for a new 3-year bailout? The can keeps getting kicked down the road from side to side. It's again descending.
Yeah, but this is a new can and a new road.
A new can and a new road, but still no closer to resolution. Anyway, let's see what the next 5 days can bring.
All right, and the movers.
Okay, well, BMW, ticker very conveniently BMWGR for Germany, if you're following on Bloomberg. €91.11, down 4.1%. Why? Simply this: they had an event around the BMW 7, which I believe they're relaunching. lots of executive coverage, and Goldman Sachs has come out with a reiteration of its sell recommendation, cutting its estimates by 5%, says it sees challenges mounting, not abating. And I think this is the key phrase here, that the company's guidance is now at risk. The fly in the ointment is China. No two ways about it. That's what's really creating a pinch here. And of course, what's true of BMW is likely to be true for Volkswagen and Daimler as well. So quite significant. And Goldman, not the only people today coming out with a comment post that BMW 7 event, and comments from the CEO there. And speaking of CEOs, one has left a FTSE 100 company this morning, and not probably of his own choosing. CEO of Barclays, Anthony Jenkins, has been asked to leave after a row of strategy. You might think that would be bad news for the share price, but no, Barclays are around 260.
Well, that's always indicates it's the right thing to do. Well, the market's a round of applause there.
Yeah, well, it would seem, and they're up for, say, 3.2%. Apparently, as I say, it was a row of strategy that caused the rift, and the focus is going to be now more on the investment bank, less on the retail bank. We obviously spoke off camera about the merits of that, but we shall see what happens. But for now, the market believes that the right course of action has been taken. If I was a gambling man, I'd say look for a split between the retail and the investment banking arms in the near future, but we'll see how that plays out. Anyway, nonetheless, they're up 3%, and that's been the market reaction. So we move on to the next slide. Rumours and movers, M&A rumours and movers. Coming back to a sector that was very much in vogue a few years ago, and then fell to the wayside, as the sort of potash and fertiliser sector. Potash Corporation of Saskatchewan, which is actually a Canadian company, but it's dual listed in the US. So over there, it's POTUS, the ticker. They are said to be considering sweetening their bid for their rivals in Germany, KNS. The ticker there for KNS is SDF, €37.15, just up 0.28% today. The bid is on the table already. It has been for some time. The current bid from Potash is worth around €41, so a reasonable premium to the current KNS share price. But the management of KNS think their business is worth more like €50 per share. This is all about fertiliser, really. Potash is a major player in the fertiliser industry. KNS is a broader-based chemical company, but has significant interests in fertilisers and salts. Potash itself was once a bid target of BHP Billiton, and Billiton has its own potash business. So if there was a deal to be done at that higher level, perhaps near to that €50 mark, that could be beneficial for Billiton. The reason that might not come about, though, or one of at least of the reasons, is that potash prices are pretty close to their lows, and they've really struggled to rally since 2013, since some sort of well, not cartel would be the wrong, but some gentleman's agreement on prices were abandoned, and there's also concerns about antitrust. So it's a complicated situation, but the reason why people might move now is that post 2020 potash prices and demand could start to pick up. So one to keep an eye on, certainly from here.
Okay.
And then if we move on, data points to keep an eye on. Not the biggest list of data from the US. However, a few things to point out. We've got FOMC, the Fed minutes, 7 p.m. London time. They'll be released. Interesting timing here. We've also got one of the Fed governors, John Williams, the San Francisco Fed governor, speaking in Los Angeles at the same time. 7 p.m. London time. Wonder why they've chosen to do that. And then the principal economic point today is consumer credit for May, month-on-month figure here. A forecast of 18.5 billion against the prior read for April of 20.5 billion. The trend has generally been up in this number, so it would be a bit disappointing if we saw a dip and a continued dip, but so the trend's been higher since January 2013. One other thing just to point out to people is that earnings season starts again in earnest, with Alcoa reporting after the close. It hardly seems more than
very
a couple
quick,
of weeks ago.
3 months.
Yeah, it's just whizzed by again, hasn't it? But we start to say earnings season, Q2 earnings in the US after the close tonight. And if we move on to Premarket Movers, Container Store Group, we mentioned these when we first started doing these shows. TCS is the ticker there. They are a specialist retailer of storage goods, I suppose, is the way to describe them in the US. They They were one of the first to report, although they're on a different earnings cycle to most companies. They were talking about Q1 earnings last night. They beat on EPS, revenues were lower, but they exceeded the company's internal forecast, and so the market's pleased with that, and they're at $18.63 pre-market, up 6.34%. And then Lending Tree, TREE Tree in the US, $79.11, up 2.95%, and that stock will enter the S&P 600 small cap index after the close on Thursday. This is a peer-to-peer lender. Again, it's one we've mentioned on the show before. Seems to be doing all the right things, and it won't do its credentials any harm by being included in a mainstream index like that. And then in terms of levels, not much change from yesterday, really. More of a tightening of the levels than anything else, with really moving our downside levels a little lower, I suppose, after the sell-off yesterday. So 64.30 now is our downside level in FTSE. I put in 6,500 as a round number on the upside there, but it has been higher recently. But we'll see if it can punch back through there to make some gains. DAX 10,650, plays 10,750. Quite a wide range. Unfortunately, the volatility has created.
Market's gone mad, hasn't it?
Yeah, it has created these wide spreads. The S&P 2058 to the downside, 2085 to the upside. Another rather wide spread. It's hard to tighten those up. And in the Dow, 17,560 and 17,800 are the levels there. Currency-wise, we've not really seen much in the way of movement. So 109.75 is our downside level for Euro US dollar. 110.40 our upside level. 73.86 for Aussie dollar on the downside. That's eased slightly from yesterday. Plays 75.00 on the upside. Dollar yen, this is quite interesting. We're creeping back to 120. So on the downside now, or back towards 120, I should say. So on the downside here, 120.80 is the figure I picked out today. Plays 120.90 on the upside. And cable will obviously be reacting to the budget as we speak. But 152.92 I picked on the downside. Plays 153.90 on the upside.
A bit painful on both cable and dollar yen in terms.
Yeah.
Would have caught people out, I would have
I
thought.
think it would, because the trends were fairly clear in that, and they just seem to have.
But if the budget's not liked, I mean, that's down at 152 something or towards 150. That's a big surprise. I mean,
yes, yeah.
We've lost a lot already in the last few.
Yeah, we have
sessions.
absolutely on both counts, and if one.
You would have thought the euro would be doing 5 points.
Well,
down.
you would. It's quite odd, isn't it, that the situation which has probably got the most volatility inherent, or you'd think would have the most volatility inherent, and it hasn't. I'm also surprised at how the currency markets have sort of been ring-fenced from the volatility in Chinese equities. But that's, again, as I said, a conversation for another day, probably.
Okay, well, Darren Sinden, market commentator at Admiral Markets, thanks for going through the Wall Street crossover show with us today, and we'll be back with the same themes and the same show, obviously updated, at the same time tomorrow.